Hello, this is Wes Johnson with your Act Advisors March 2024 update. Usually Doug English does these recordings, but he is traveling right now, so you guys have me this time. And for those of you who are not familiar with me, I am the other owner of the firm, and I'm based down here in Charleston, South Carolina. So let's get into it. So far this year, we're 2 months into the year, and on the surface, it looks a lot like last year. If you just look at the S&P 500, looks like we're having a great year. It's up, 6.5, almost 7% just in 2 months. But the S&P 500 is large cap U.S. based stocks, mostly leaning towards those big growth tech companies. If you look at the Dow is also large cap stocks, but without all the growth companies, it's up 3.5. Still on pace to have a really good year, but nowhere near the 6.5, 7% that the S&P 500 has done so far this year. But outside of those two indexes, outside of large cap US, the rest of the market really hasn't done much. You look at mid caps and small caps, they've barely made anything this year, and the bond market's down 1.5%. So it does feel a lot like last year in that just large cap stocks make the market look like it's pretty good, but really under the surface, it's not as great as it seems. So we have had a few changes recently to the portfolios. As you guys know, we run the stock rotation and the bond rotation strategies. Both of those changed for March. So for the stock rotation strategy, January and February, those months, we had the QQQ position. It's a NASDAQ ETF. We refer to it as the Qs. It is a basket of large cap, very tech heavy stocks. And it's been great for those 2 months. It made over 7% for those 2 months. Not much more we could ask for out of that position. But recently, those large cap stocks, those growth tech stocks, have lost their leadership, and it's been mid caps that have kind of stepped into the leadership role. So that QQQ has been replaced with a mid cap ETF as of March 1st. And then the bond rotation strategy, which typically holds 3 positions, 2 of those positions do not change. So we'll be keeping the high yield bonds and the preferreds. But we will be selling out of the long-term treasuries, and we'll be replacing that with convertible securities. So both rotation strategies are changing for the month of March. There's another change we made recently. We replaced a long-time position that we've held for a long time. The symbol's OMFL. It's the Invesco Dynamic Multi-Factor ETF, which is a mouthful. We replaced it with a Wisdom Tree rising dividends ETF. It's large cap stocks that are dividend paying stocks. They're a very conservative, less risky section of the large cap space. So a lot of changes in the portfolios, really good start to the year for large cap stocks. I do want to caution everyone, large cap stocks, especially the S&P 500, have had such a strong run over the last 4 months. I mean, just really strong with no volatility whatsoever. They're pretty pricey right now. And this is an election year. Usually the first quarter of an election year, we get some volatility, and we have had no volatility up to this point. So it would not be surprising at all. It would be completely reasonable and normal market behavior if we got a pretty good bump in the road at some point in the month of March. We would not view that as anything to be concerned over or to panic over. We would view that as a buying opportunity. So we're long overdue for some type of a pullback, especially for the large cap growth stocks. Oftentimes what happens is the high flyers, the ones that are doing the best, large cap growth, would come back to earth a little bit and let the lagging areas, mid caps and small caps, catch up a little bit. They call that a consolidation phase. So we're due for a consolidation period at any time now. So if that happens, again, buying opportunity, not necessarily a time to panic. So with that, I just want to say thank you guys for continuing to be clients. And if there's anything we can do for you, please don't hesitate to reach out.